Well, welcome back, everyone. It has been a tumultuous week in markets with lots of trading fodder. I want to start this weekend video off with giving you a lay of the land of how I see markets into the end of this week, and then some of the specific trading strategies I've been employing over in the private active trader room and on WealthCharts. You're looking at the S&P E-minis on the screen, the primary market that's been in an uptrend channel from October of 2022, a true bottom of the market. We saw the market go into a box in November of 2024 to Feb of 2025 before the tariff tumble. It's a very similar box that we are in this go around. From the uptrend in April of last year, we're in a late stage uptrend that's moved into a sideways range, which usually ends up being a topping range ahead of a correction. We've come down below the bottom of this box several times this week. In fact, every single day this past week, from Monday all the way over into Friday, as I record this video, into the last couple of hours before markets close on Friday, we are below the bottom of this box. The value is 67.80. While we remain below the bottom of the box, the potential to come down further is a higher probability. It can be offset temporarily by counter trend bounces, similar to how we saw the market play out for a good chunk of the week. But it had not been able to get back up above the center of the box to give this market a repair. The geopolitical risks remain high out there, and we're looking for signs and signals across asset classes that can give us a sense of whether they're backing off those high geopolitical risks. One of the things that we can look at is the direction of the euro. If the euro finds itself moving up, the dollar's down, and that's supportive to a tailwind on markets, at least temporarily. The waterline is 1.167 for euro futures. We're still not above it. Risks remain high. When we take a look at oil, which is central to the conflict in the Middle East right now, it has pushed out to higher highs so far on Friday, March the 6th, versus the highs on the 2nd of March, and it remains in a spot where it's accelerating higher, projecting even higher highs. That still puts a headwind in front of markets. We can also look at other indices like the Russell, that tends to be a canary in a coal mine. It's broken its uptrend channel and is currently down about 2.1% on Friday, March the 6th versus the prior day. The NASDAQ, however, has been in a worse spot overall as we've seen software companies come down with agentic AI models taking over. But the NASDAQ has actually been some of the saving grace to stabilize the market. It is currently down 1% in markets. As we look at the ES, it's down over 1% in markets. The Nasdaq's trying to act as a bit of a ballast. However, we're dealing with technical signals that are still quite negative. I do see downside risk for the market, ultimately down to the bottom of that long-term channel, but it's likely going to be a journey similar to the journey we had back over here in 2025. So let's go take a look at some of the trading strategies I've been employing over in the active trader room and on WealthCharts, and we're going to use a multi-time frame dashboard with the triple S indicator on it to help us understand where we're at and then what can potentially be done about it. We've got a down triangle as of the 3rd of February, a sell signal on a daily chart that's still in force. I'm going to bring this chart full screen, and you'll notice that against Rob's MSR channel, we closed below it yet on Thursday, the 5th of March, and so far well below it on Friday, with still a couple of hours left to trade. A couple of closes below the MSR channel with that triple S down triangle and the double red dots from the triple S tool implies downside risk over the week to week and a half or two in front of us. The 4-hour chart tends to look out 3 to 5 days. Its most recent signal was as of 6 p.m. Eastern time on the 4th of March, and we've got the double dots and we are below the channel. Downside risks over the next 3 days still are in place. A lower low at a minimum is a likely outcome before a counter trend bounce. The 1-hour chart that looks out 3 to 6 hours went into a sell signal state at 4 a.m. Eastern time on Friday, and we did see the jobs print come out and do some more damage to the market, push us down to a lower low. Since that time, the market's tried to recover, and what I'm looking for, which I'm looking for a trade that can last for hours, would be a rise that takes us up to the falling MSR channel, moving support and resistance channel, while remaining in a sell signal state on the triple S tool and looking for this area as a reshorting moment. Alternatively, I'm willing to play both long and short short using the triple S trading tactics on a 5-minute chart and using the 1-minute chart as confirmation. We're currently, as you can see, in a buy signal, but we need to get above the top of the MSR channel to validate a very temporary long side trade in this risky market. I'd much rather be trading with the primary trend, which is the short side trade. But again, we have to work with what the market gives us if we're willing to take the risk. At this stage, the bigger trade is a reshort that I'm looking for, where we can come up into resistance and back down again, or the bottom can break below roughly the 67.40 area, and I'd be looking for more aggressive sell signals on that 5-minute and 1-minute chart to take my short side trades, much like I did over in the active trader room and on WealthCharts for a good chunk of this week. I hope you enjoyed this video. I hope that you're staying safe out there. This is certainly a market where volatility is abound, and one of the great trades that we offered up to members of the active trader room and wealth charters alike, and we did that about a week and a half ago, was identify a long opportunity on volatility. A 10% move to the top of the box, and then about a 20% move up to the underbelly of support where UVXC found support before it rolled over. This has been an excellent trade on the week, and I hope that many heard about it and also had a chance to partake in it. I wish you a wonderful, wonderful rest of your day today. Looking forward to sharing more insights on this volatile market that's providing us with a lot of trading fodder in the days and weeks ahead. Have a wonderful rest of your day, and thank you for watching.